Move on and bring you our guest for today because we have lots of queries that have come through. So Kush Bohra joins us. He's founder at kushbohra.com. We also have Sharad Avasthi, who's head of PCG Research at SMIFS, who's joining us now. Kush, Sharad, thank you both very much for joining us and taking out the time today. The first query is an interesting one and it comes in on Titan. So Arjun Mehra writes to us from Bhopal. He says he has 100 shares of Titan at, get this, 300 rupees a share. He's a medium-term investor and he wants to know whether to hold or sell this. So I don't know, because he's saying he's a medium-term investor. I hope this is the correct buy price that we have, because I think Titan was at 300 perhaps in 2014. So, I mean, if he's been holding it since then, congratulations to our caller who's really made good money on this one. But Sharad, coming to you, do you think of Titan as one stock that is, you know, just safe to have in your portfolio for the long haul and that you should just keep holding this one?
If you're holding it for the very long haul, I think it does make sense. But if you look at a 1-2 year kind of horizon, I think largely it is fully priced in. From the current prices, we are expecting an earnings of somewhere around 55, say, in FY25. So at best, it could trade at somewhere around 40 times. So considering that, I think 26,000-2700 is a fair value. If you are happy with that, I think you can continue to hold on to it.
Okay, continue to hold on to it. Well, Kush, what would you envisage in terms of further gains on the technicals of Titan?
Well, this is far too long a time horizon to comment anything except to say, add more and, celebrate. But yeah, I mean, on a more recent note, the stock has rebounded quite sharply from, 2,300 levels. I wouldn't be surprised if we see 2,800, coming on the stock in the next few months. So definitely, I mean, nothing more other than, as I said, add more for the gentleman. And congratulations for, the bumper profits.
Absolutely. It also goes to show that if you just hold on to your investments and have the patience to see it through, you can probably sit on big gains and, go through the volatility that emerges as well. For good names, though. But let's get to another query now. We have K. Sambasiva Rao, who calls us from Andhra Pradesh. He has a query. Mr. Rao, go ahead.
Yes, madam. Good afternoon. I brought easy trip planners at the rate of 61. I want to add further. If after knowing that the prospects of that company, please inform that.
Okay, so you would like to add further in terms of easy trip planners. Yes, what is your time horizon? Are you a long-term investor?
I am long-term investor. I am comfortable up to 3 years.
Okay, comfortable up to 3 years. Kush, difficult one on the technicals, at least 3 years perspective or time horizon. But what would you recommend based on the charts that you've seen of easy trip planners? Does it give you confidence for the longer term?
For the longer term, it does, and I'll tell you why. Because the recent move has not been so encouraging. The stocks actually dropped from 73 levels. But if I just extend the time horizon, this is precisely where the stock had actually made a long a base for a very long time, and then just shot up. It's come back to those levels. So in fact, this is a good time to be asking this query that should I add the stock? This level, I'd say in fact about 45 to 50. This is the kind of zone where there is a lot of accumulation that's happened in the stock. But I would suggest go in a staggered manner, because the stock is in a near-term downtrend. So he might actually get slightly lower levels also. So 45 to 50 zones is where he could accumulate on the kind of time horizon that he's talking about. I won't be surprised if the stock does go back to 65 and 75 kind of zones. So yeah, a good time to accumulate.
All right, good time to accumulate at these lower levels. The next query comes in from Joseph George, who calls us from Navi Mumbai with a query. He has investments in BHEL. Sharad, coming to you on BHEL, how do you look at this one? All right, I think actually we do have him on the line with us. Mr. George, if you can hear me, please go ahead and ask us your query. We will get both of our guests to comment on it as well.
Yeah, this is Joseph. Yeah, so I had BHEL, holding 900 at 52 levels average, but current levels are at 71. And yesterday there was few brokerages which were saying that there's a downgrade and it will come down to 45 levels. So my query was, should I book profit and move into some other public sector enterprise, or hold on?
Okay, and how long are you comfortable holding on to this investment that you have in BHEL?
I'm a long-term investor. I hold a few PSUs, including PSU banks. So, but this particular, since the brokerage query had downgraded brokerage are downgraded, I'm asking this specific query.
Yeah, I mean, the stock has also corrected quite sharply, right? In the past 1 month alone, it is down around 12%. Sharad, thoughts on BHEL? I mean, like, like Mr. George was pointing out, there have been some downgrades that have come through. Since he's a long-term investor, do you think it's still, a good one to hold, or would you recommend another PSU that he could move to?
No, well, switching is something that you need to decide based on your temperament and what suits you. Because within the PSU basket, there are a lot of opportunities. Some of them are good on valuation, some of them are very good on dividend yields, some of them are good on both things, and some of them have also very good long-term prospects. BHEL particularly, I don't think dividend yields or something are going to play out in the stock. But earnings should grow at a very good rate over the next 1.5 to 2 years at least, because the capex driven growth that the government is talking about, that should boil down into some growth for BHEL also. The major part is that the problem with discoms and some problematic discoms or discoms that have some financial difficulty, which are a major share of BHEL's portfolio. So I think the way the government is looking at improving the viability of discoms, that should substantially benefit BHEL also in the long term. So I think even if he holds on for a target of around 90, which is roughly 30 times the forward multiple, I think it is very possible that over the next 1.5 to 2 years, it gets a target of somewhere around 90. And some revisions beyond that are also possible as we see improvement in the operating cash flow because of the improvement at the discom level.
Okay, well, yes, definitely it is that capex outlay of around 10 lakh crore which was announced in the budget. So maybe there would be some filtering down to a lot of these companies within the PSU space, such as BHEL as well. So that's the word coming in on BHEL. But nonetheless, let's move forward. We have Akshay Bhatt, who writes to us from New Delhi. He has 460 shares, which he's bought of Max Healthcare, which is a hospital company. And he's bought it at around 434 rupees a year ago. So he's a medium-term investor. He wants to know whether to hold or sell. He's currently sitting on a marginal loss at this point in time. Sharad, what would you recommend? Because a lot of the hospital companies have reported good occupancies. They're sustaining at those levels. International patient revenue is picking up. How does Max stack up? Do you think it'll surpass the buy price?
Yeah, I think it should easily happen. Post-COVID, actually, a lot of normal operations, etc., have started happening at the hospital level. And these guys are also doing a very rapid expansion. The change in management should also do good for them over the long term. And they are adding somewhere around 2,800 beds on a capacity of around 3,400 beds. So that's a decent capex over the next 3 to 5 years. And gradually the growth rate should be very good. So we expect FY25 numbers to be somewhere around 15 times, and a 40 kind of multiple would be very easy. So I think he can hold on for a target of somewhere around 600 on the stock.
All right, 600 rupees on Max Health. But with that, we are going to get into a short break. So, Kush, Sharad, I request you to please stay on because we have lots more queries that have come through and we will ask you in just a bit.
Welcome back. You're still tuned into Your Stocks on CNBC-TV18. Well, for the broader markets, there's definitely some amount of resilience coming in for specific stocks, you'd have to say. So there's a lot of buzzing stocks within the entire space. Rossel India, which is a tea company, is seeing a 15% gain at this point in time. Though it's underperformed on a year-to-date basis, it's down 16%. But today, there's some amount of gains coming through for that particular counter. Balaji Tele, we don't talk about that particular stock too often, but it's doing well in today's trading session. So Balaji Tele, which is basically the media company, should come up for you at this point. That stock too buzzing around today. And Newlin Labs, which came out with its numbers just a couple of days ago, they did hold their conference call. It was up 10% post numbers, is seeing follow on buying in today's trading session. So Newlin Labs over 1,600 rupees for that particular counter, up around 5% at this point. But let's get back to all the queries that we have for you. We have Kush Bohra, who's joining in on the technicals this afternoon. Sharad Avasthi, who's answering all of your fundamental queries. We have Vivek Sharma, who's writing to us from Mumbai. He holds 126 shares of Divi's Labs here. and he bought it at around 3,085 rupees. Currently, the share is below that level. And he also holds around 100 shares of Hero MotoCorp, another Nifty company, which he bought around 2,617 rupees. And he's a medium-term investor. He wants to know whether to hold or sell. Unfortunate, Sharad, but two Nifty companies, both of them where he's sitting on losses. What would you recommend at this point in time to this particular investor? He's sitting on Divi's Labs as well as Hero Moto.
Firstly, Divi's Lab. I think after this bout of correction, which has been very sharp, valuations are not particularly expensive for Divi's. The problem is that most of the prospects, future prospects, are dependent on a bit of uncertain events. That's a problem that they're having. One is the SEZ unit coming up and then starting to contribute. The COVID-related drug issue has gone behind us, and the third issue is that the CRAMS business has not picked up, the API business has not picked up. But I'm expecting the second half probably to be better for most API businesses, though CRAMS is something, I don't know, considering that the rupee starts to appreciate against the dollar, that could be a business that could see some pressure. But otherwise, generally, I think DV should do well from here. The API segment particularly should outperform. And I think you should hold on for a target of somewhere around 3,400, 3,500 on the stock. The other stock that we are talking about is Hero MotoCorp. Hero MotoCorp, I'm very bullish on the prospects. I think the rural part is picking up, the new models are picking up, raw material pressure has substantially eased, and the export market could provide further triggers. In case the electric vehicle launch also does gather pace, which we are expecting to gather a decent pace over the next 1.5 to 2 years, then there is a possibility that there could be substantial re-rating for the stock. Initial targets, what we are looking at is somewhere around 3,000 for Hero MotoCorp. But I'm very hopeful that over the next 1.5 years, there could be substantial re-rating and you could be possibly looking at somewhere around 3,500 as well.
All right, so that is on Divi's and Hero MotoCorp. Let me also bring Kush in on this. Kush, take us through what you think first of Divi's Lab. Of course, the recent cut that we've seen, I think 16% in 5 days or something, is because of the earnings that came through. But do you think the worst is done and it could still pick up from here?
Well, there's a very good possibility because if you look at the pattern also, every quarter the results have come out, the stock has taken a dip, but it has recovered from there, and we've seen any kind of anywhere from 10 to kind of 15% recovery from the dip. Now here too, the stock is very close to its support level, which is 2750. So my suggestion would be hold on. Even a neat jump, could take the stock to about 3100 levels, which is fairly close, or or rather, yeah, I'm almost at his buying price. So hold on with a trailing stop loss of 2750. As far as Hero MotoCorp goes, same idea. The stock is very close to its support zone, which is around 2500. So hold on to this one as well. Any kind of bounce here, the first level to watch out will be 2700 and the second will be 2850.
Okay, that is on Divi's and Hero MotoCorp. We also have another query coming in. This is from CS Mohana Rangan, who writes to us from Kerala. He holds 800 shares of Wockhardt Pharma, which he bought at 221 per share. And he also has 2,500 shares of Coffee Day, which he bought at 45.81 per share. He says he's a medium-term investor and he wants to know what he should do with both of these investments. Kunal, coming to you first on Wockhardt, what do you think of this one? Because it has suffered quite a knock, right? Sorry, Kush. It's down around 50% in 1 year. And the high for this one, the high for this year, this one was above 1,800, right? So how much of a recovery do you see from these levels?
Well, again, strictly technically speaking, there, I don't see the stock rebounding, to very high levels. The only saving grace here that I see is that the stock has gone into an oversold trade territory, and 180 is where it's made an intermediate base and it's trying to revive. So my suggestion would be hold on with a trailing stop loss of 180. Any kind of bounce will take it to 200 levels and then 215. This is fairly close to his buying price. So again, he'll be exiting at a loss, but at a much lesser loss than he is sitting at currently. Coffee Day, well, the clear answer here is exit. Even that is in a loss. The stock is trying to make a bottom, but really hasn't been able to. So my suggestion would be an exit on Coffee Day and hold with a trailing stop loss of 180 on Wockhardt.
Okay, hold with a trailing stop loss of 180 on Wockhardt, and Coffee Day is not something that you're too enthusiastic about. Sharad as well as Kush, thank you very much for joining in and giving us all of your perspective on all of the queries that we had. For the markets at this point in time, it's definitely picked up a little bit of pace for the broader markets. Remember, last week there was a clear outperformance for the mid caps. This week, it has been a little volatile. So let's see whether this sustains or not. For the Bank Nifty, it's definitely weaker. We have the Bank Nifty, which is down around 0.4%. It's at the low point of the day currently for the financials index. So let's see how that pans out as well at this point. Overall, Nifty is holding at around 17,931. We need to wrap up on your stocks, but do remember that you can email us all of your queries and we will be addressing them with our experts every afternoon. Stay tuned. Closing bell up next.